Hello, everyone. I hope you're doing well. The reason for my video today is we saw another all-time record high price in the price of gold to close the trading week, Friday night, our time. And so here we're looking at a 5-year chart of gold, which we've looked at many times before. Well, let's just have a quick recap. Gold obviously first breached that 2000, that very important psychological price barrier of 2000 back in August 2020. And you can see that around the 2050 level, this is a weekly chart, very significant price level. You can see it touched it again in March of 2022, touched it again in May of 2023, made a new high in December of 2023 before a brief consolidation, and then onward and upward it went. So you can see the touch there, the touch there, the touch there, a fresh high, a little consolidation flagging pattern, then onward it goes to the next level. And of course there was it's a little bit harder to see on this particular chart, but you could argue that there was an inverse head and shoulders pattern forming there. And generally, if you measure the distance between the head of the pattern and the shoulder, and then you project it upwards, you can see it's not a coincidence. Once it broke out, you can see that's the first level that it got to, just there. So that's how you can sometimes use charts to make price projections as to where you think things are going. And then, of course, today, after the consolidation, break out to higher levels. If we clear that and zoom into a 1-year chart, so we're zooming into this region, you can see once it achieved that new high around 24,400, around 2,440. You can see there was a high there, and then another high in May of 2024. And then eventually in July, we breached and made a fresh high. A little bit of return to the scene of the crime to test the breakout, and then onward and upward to a fresh high. So you got the touches there, touch there, breakout, retrace, and then some little bit of a retest again, and then onward and upward to a fresh high. And of course, you could see the strength in gold. You can see there's a negative divergence signal on the MACD and RSI, so indicating to take profits here at the previous all-time level, all-time high, and there was barely a sell-off. I mean, that sell-off from there to there is only about 5 or 6%, so not a big sell-off. That shows that there is a lot of strength in gold. But if we come back to the 5-year chart again, which we can see price making higher highs, and the momentum indicators are starting to roll over and make lower highs, which is a sign. It doesn't mean that the price is going to crash. It just means it's a sign that this run is maybe a little overdone, and that it's appropriate to. And of course, at an all-time record high price, you probably shouldn't have your full allocation anyway. So that's why I've been advising many of my clients to, we're staying invested for the long term, but we don't have our full allocations at this price level. Obviously, at an all-time high, the price we know in the short term is expensive. Silver not doing as well as gold, but this is a 5-year chart again of silver, and you can see this $26 level from February 2022 is key. You can see it touched a couple of times there, returned there in May 2023, couldn't get past it, returned there in December 2023, couldn't get past it. Notice how once it breaks the level, if you think of support and resistance as, so resistance being a ceiling, that's the ceiling there. You can see if we zoom in a bit, breaks out above the ceiling, return. So if you were to jump through the ceiling of your house, you jump through and then the ceiling would then become the floor. You come back down to test the floor. It made a new high for the move. And then, of course, rolled over again, came back down to test it one more time. And now it's recovering a little bit, moving back up, but not performing as well as gold. And you can see silver is probably, it's hard to say what the trend is there, other than that the 2650 level was a buy level for people who are bullish on silver and wanted to be invested in silver. And we might see one more little dip, but notice the momentum indicators. It's early days, but they're starting to find a bottom there. So positive signs for silver in the longer term, but it's far riskier than gold, a little bit more volatile, and it's underperforming somewhat. Well, it's not making new highs. Gold's up here. If we come across to the miners, and this is what, I often say the miners, so this isn't a specific mining company. This is GDX, which owns a collection of the top gold mining companies in the world. So I consider this to be the riskier end of our precious metals allocation, and generally the first one I look to sell. If we go, as you can see, the price of gold, if we overlay the price of gold, let's put it on let's do percentage. And let's, TradingView keeps wanting to default to a color that's kind of hard to read. Have a look at the high that gold hit. Let me try and line this up. That's the high that gold hit back in August 2020, which we talked about earlier, that $2,050 level in gold. Gold is up 27% since then, while the miners are actually down 11.37%. So the miners, if they were to, if they were going to maintain that relationship and be at a record high, well, not a record high, but be at a high like gold, they would need to go up 45%. So you could make a case the miners are very undervalued, or you could make a case that the miners are probably the worst thing to buy if you want to benefit from a rising gold price. And if we have a look at this trend, though, you can see you might be able to draw. See, one of the reasons why I don't like angled trend lines, why I prefer key price levels more than angled trend lines, is for this very reason. Let's just start again. You can see if I draw an angled trend line, I could make a case that this is the downtrend, because look at how many areas of trading look at all this activity here, how many times it's bouncing off that level, and you could say this was a false break. It attempted it again, it attempted it again, retraced, made a new high, uh, returned to the scene of crime, rode along the ceiling, and now it's made a fresh high above that. So do you draw the line there, or do you draw it here and say you capture that high, which captures that high, and you say, well, is it at a sell level here? You got that level there, that level there, that level there. Not too much on the momentum indicators there, maybe some slight rolling over. But I would say more significant is that it's broken that previous high, breakout, little retrace to test that previous level, onward and upward. And let's zoom in and have a look at the gold miners on a 1-year chart. You can see even though the price of gold made a fresh high, the miners did not. So that would be a little bit concerning. And you could say the price was making higher highs there, while the momentum indicators were making lower highs. So that was, a sell signal. Now you would have probably sold around there. So a little bit uncertain here on the gold miners. I wouldn't be buying them here necessarily for clients. If you can see from the 27th or 28th of February, when they were trading at $25, they've now moved up. Well, they're up basically 50% in what's that, 6 or 7 months. So they've had an excellent run. So I would exercise caution here, and that's exactly what I'm doing for clients. Is just being a bit cautious and reducing allocation a little bit. But this is looking more positive for the longer term. Short term, probably expensive. Longer term, looking more positive. Now let's have a look at the Australian dollar price of gold. Now, the Australian dollar price of gold since the low in March of 2021 has moved up 70%. So those of you who own gold priced in Australian dollars, which most of my clients do, if you're following my advice, we own some gold priced in Australian dollars. It's at a record high or very close to. It didn't quite trade at the record yesterday, or that candle might be from, is that candle? Oh, that's so it made a record high the week before. But you can see prices had an excellent run. It was probably trapped in somewhat of a channel here, I guess you could say, and then it broke out above that channel. You can see in a channel there, breaks out, return to the scene of the crime to test the breakout, to test the new floor that was previously the roof, the ceiling, and then goes on to make a marginally higher high. But you can see the price slightly higher, momentum indicators starting to roll over, and I'm pretty sure I showed that on the actual price of gold there as well. Yes, I did. So you can see, again, this doesn't mean that the price of gold is going to crash. It just means that the uptrend is losing momentum. And it could be like what we looked at earlier on the daily gold chart, where, okay, it was a sell there, but then there was only a 5 or 6% pullback. Let's go to the US dollar. Let's have a look at a weekly chart first of the US dollar index. Not a whole lot of direction, but you could say it was trapped in that pattern there, and it looks to be trying to break down from that pattern. Not a whole lot to look at there because you've still got that previous level of support. But if we zoom into a 1-year chart, and you can see the US dollar has been selling off quite a bit. You've got, and again, I like these previous levels. You can see this level here around 104 was pretty key. You've got the high there, a lot of activity there. It found support there. It found support there. It found support there. With that, it broke. That's where it broke down. And then once the breakdown was confirmed, you can see quite a sharp red candle sell down. Let's have a look at the next previous level, which is this 102, sort of 102.70-ish level. You can see the price initially, you can see the little the little spike there, it made a lower low. That means it made a low intraday. The candle shows the opening and closing prices. So notice there was some buying back, broke down, and now look at that. That red candle is sort of breaking down from that level. So that's not looking good for the US dollar, but a falling US dollar is generally good for gold prices, commodity prices, generally good for stocks, real estate. A strong US dollar is not good for investments in general. As a general rule, I'm not saying that applies to every investment all the time. The next level on the US dollar would be this close to the 100 level. And what we'd probably see if it does, let's say if it was to trend down here, you'd probably start to see these momentum indicators rolling over, and it would probably be a buy at this level. And there are ways that we can not so much buy the US dollar, but hedge or protect against US dollar strength, which can put downward pressure on our other investments. If we come over, quick final thing to look at, if we come over and have a look at the Aussie dollar, let's look at a weekly chart. Generally, the Aussie dollar is considered a quote risk on currency, or a currency that is very correlated with commodities, metals performing well. So because Australia is, we obviously do a lot of we have a big mining industry, so we're somewhat of a mining economy. So if mining is doing well, if metals, commodities, however you want to classify them, if they're doing well, generally the Aussie dollar is doing well. And you can see since 2021, the Aussie dollar has been in a significant downtrend. You can see a touch there, touch there, touch there, touch there, and have a look at what it's doing now. You can see it's attempting a breakout, and it has been since October 2022, which coincidentally was when I was saying, hey, this is a low for, stocks are at a low, don't short the Aussie market anymore. Make sure you have your gold allocations, your bond allocations. And we've looked at that in many previous videos. I think that's proved somewhat correct. But have a look at the trend now. We've got a higher low, higher low, higher low, and you can see this downtrend is there was a nice break there. Let's zoom in a bit. Notice how it breaks out, bounces along the new floor, breaks out from the ceiling, bounces along the new floor, comes back to test, and it's moving up again. So this is not me saying that the Aussie dollar is in an uptrend. This is me suggesting that the downtrend in the Aussie dollar is failing. And that is generally a positive sign for inflation. For, and not that inflation's good, but if you're an investor, inflation's good because your stocks, your real estate, your bonds, your gold, those are all prices as well. So if there's inflation, those prices are likely going up too. So this is a sign that the Aussie dollar downtrend is losing momentum. It's starting to break out. And that would be a longer term, keeping in mind this is a 5-year weekly chart. So this is a longer term chart of many years. That for the longer term, probably a good sign for things like gold, for stocks, all that sort of stuff. So something else to keep an eye on there. I've looked at stocks and broader markets in one of my previous videos, I believe, from last week. So check that one out if you'd like a broader picture look. But the price of gold making a record high, keeping in mind this is the futures price. The chart says 25.46. The price over here says 25.37, and the spot price, I believe, closed at 25.09. So we've just cracked that 2,500 level, which is a nice psychological price barrier to crack, and we've done so with a strong weekly close. Thank you very much for listening, and as always, feel free to reach out if you'd like to discuss these issues in more depth. Thank you.